Okay, we are going to start off this panel. This is very important. This is on financial literacy. This is how to make the money, keep your money, and build your money. This panel, building wealth, keeping wealth, and giving back. And I want to introduce Ebony Stone, the SVP of Client Operations for Rocket Companies, which includes Rocket Mortgage. Thank you very much.
Hello,
Absolutely.
everybody. How are you?
All right, we have Inika Bruno, the sales leader from State Farm. Notice how I said the sales leader. Okay. And Jacqueline Beauchamp, the CEO of Engaged Media, an entrepreneur, doing her thing.
Absolutely. Hello, everyone.
Okay. And again, this is about building wealth, but I want to start things off. And Jacqueline, I want to start with you because, like when I was coming out of school, probably you, we didn't have much income to start saving, building, and planning, regardless of what our parents and employers told us. What are some of the initial steps? And I'd love for everybody to join in once you kind of get going.
Hello again. The initial step, start where you are and start as early as you possibly can. My background is I am an electrical engineer. I'm a graduate of Southern University. My minors were mathematics and computer science. Financial literacy was not a part of my vocabulary at the time. My parents did what they could for us. It was 5 siblings, but my desire was to always own my own business. And let me tell you where your desire and your passion takes you. It takes you where you want to go. When I graduated college, my career started as a technology designer with IBM for 10 years. I stayed with IBM. My passion, once again, was always to own my own business. I needed to learn business and financial literacy, and I learned it in the corporate environment. Leaving IBM after 10 years, went to Motorola, became their first African-American female general manager. And let me tell you what my average budget was. My expense budget, no financial literacy, but I wanted to learn, was managing 250 employees worldwide. My expense budget was $25 million annually. I had to bring in dollars, revenue for the retaining of that business and to grow that business in sales and revenue with a margin expectation back into the company. That's financial literacy. Learn it early, learn it quickly, and invest your dollars from your career and drive that into you becoming who you want to become. Invest early, I did that. But I wanted to extend my financial understanding in my wealth creation by owning and starting my own company. I didn't know anything about capital raising. We're going to get into a lot of different conversations and subjects about different forms of money. But financial literacy, young people, it is to start early, seek information, even though there are people that may not be around you that can share certain information. Where you all are, you guys have access to all information all over the world. At the time, we didn't have that, right?
We did not.
So you guys can go and get it in a second, literally in nanoseconds. There is no reason for you not to have and to be able to plan, but you must start early.
Yeah, I want to share, my story is a little different, right? I didn't have the intentionality behind saving and investing. Quite frankly, when I came out of school, I wasn't making a whole lot of money, but it was more money than I had ever seen. And so I just started spending it. I had no idea, even though I had taken the classes in school, I really didn't understand the importance of saving and investing. And I stumbled into real estate totally by accident. I have a degree in information systems. My undergraduate degree is in information systems. I was working in systems. I left the organization I was working for about 4 or 5 years in, had met a guy who is now my husband, and he was a contractor. And I literally stumbled into real estate and started doing mortgages, and none of that was in my plan. But when I started doing it, I started seeing folks your age getting $100,000 gifts from their parents to purchase homes. Or they had these accounts with all this money in it. And I was thinking, I went to school, I did the right things, I got the job I was supposed to get. I don't have that account. My parents can't give me $100,000. And I just got curious. And the more curious I got, the more I found that there were all of these investment vehicles and things that I knew nothing about that I had to learn about. And so, unfortunately, I started late. So my advice to you guys is to get curious now. If you don't know, it's fine. I didn't know. Just get curious. Start, you mentioned getting information in a nanosecond. Go find that information. And you don't need a ton of money to get started. Whatever you have, you can start with. If you get a corporate job, every corporation that I know of allows you a 401k. Invest in the 401k, right? Just take little steps so that you can learn the value of compound interest. That's something that I did not learn early on. Luckily, I've been able to surround myself with people who have been able to help me, and I've been able to diversify, right, and get into more types of real estate than I ever understood before. So that is my advice to you. Just get curious now and take what you have and start now. You don't need a whole lot.
And I'll just add a little bit to what they shared. Definitely, you want to start now. And the way that you can start, because I know some of you may not be in a position to save a large amount of money, but you could just start with just creating a budget. If you create a budget with the income that you have now, or maybe even the allowance that your parents give you, it'll help start the foundation for when you start to make a large amount of money. Another thing I would want to suggest is that you look at having multiple streams of income. So he mentioned that I am a sales leader for State Farm, but I also own my own business. It's Bruno Enterprises, where it's pretty much financial literacy workshops to students, and it's also real estate portfolio. So you want to also look at multiple streams of income because you never know what could happen. So you want to be able to prepare for the future.
Okay, so let's jump off right there. So for a lot of these young people, we were in their chairs a little while ago, me a long while ago. When you talk about multiple streams of income, I had a good job. I was working at a newspaper in Richmond, Virginia, making at the time about $20,000, barely able to pay my rent and to have a car note. But what do you mean when you say multiple streams of income?
So when I say multiple streams of income, it could range from a variety of things. For me right now, it's my real estate portfolio. So I've purchased homes. And one of the ways I was able to start with purchasing my very first home is because when I started with State Farm, someone suggested that I put $50 into my 401k account every month. And I was like, $50, I spend that on my nails, I spend that on my hair, I can do that. Well, within 4 years, I had enough money to put a down payment on a home. So after I purchased that first home, then after I started renting it out, getting that real estate income coming through, I was able to get money to purchase a second home. And now here I am 8 homes later, and I'm almost making more money in the real estate than I am with my State Farm income. And that has helped me, especially in this COVID environment, because as a sales leader for State Farm, my income is generated from commissions. So in COVID, my commissions went down, but I always had that income from the real estate. Now for you guys, when I was in college, one of the things that I did was mystery shop. Mystery shopping is still available, and it's very easy. It's a small amount of income that you make, but you can take that money and just start saving as you start to prepare for the future.
Okay, real quick, because you guys are talking 401ks. Okay, a lot of companies do not necessarily offer 401ks, and for those, first off, let's explain to those who may not know what a 401k is, but also what are other potential options? Is a savings account worth it with interest rates being so minute right now?
So I'll give you my opinion. I think any savings is worth it right now as you continue to learn. A 401k is just a pre-tax investment vehicle. You put your money into this vehicle and it allows you to gain interest. The money is invested in the stock market most often and you earn interest on it. A lot of companies will match. So you put money in a 401k and they say, hey, Ebony, you put $100 in here, we're going to put $100 in there to match. And as you get what we call vested, you put so many years in with the company, usually somewhere around 4 or 5 years, all that money that they have matched, it becomes yours, right? And the one thing that I want to add, Anika was speaking about multiple streams of income. Oftentimes, I don't think we think of our talents as something that we can turn into income. I'm sitting here looking at you guys, and I'm sure if I ask you to raise hands, there are ladies in the audience that braid hair. There are gentlemen that are cutting hair. There are YouTubers. There are all types of folks just in this small audience, and you can turn that into dollars. That is another stream of income for you. You just have to think about how can I take what I have and make it make money for me. So I just wanted to throw that out there. You can absolutely take your talents and turn them into money for you.
And Jacqueline, again, I want to just hit some of the basics, right? So could you explain, investments to us are a long play, right? But to these guys, what is liquid, meaning the cash you've been able to take out and spend without getting jammed up tax-wise on it, and what are some of the investments you make that will benefit you in the long term? Because again, we're talking about financial literacy, so let's, again, break down the short-term liquid, long-term assets.
Yeah, look at building your plan around, well, I'm a little bit different, Steve, because I looked at myself as an investment, right? So I started with making sure that I invested in myself. That included my understanding, my learning, but every dollar that I made, I always had a set aside amount that I did not touch because I was utilizing and saving those dollars for the investment within my future. And the other dollars I did operational for my home, my living, taking care of all of my general expenses. But the dollars that I would set aside and invest in, I can't tell you what to go and invest in. That I won't advise you on that. But I had a very diverse set of portfolio that I would do. And there's going to be some that you look at your portfolio and it's a pie, right? And let's say that for every dollar that you put in, you're going to have some passive income, you're going to have some direct income, and you're also going to have some things that you may put at risk. For those that don't believe that the stock market is one of those, right? And I know that there are young people in the audience may want to start understanding about crypto and NFTs, and we can have some conversations about that. But it's a matter of making sure that you protect what you need to protect at home first, right? And then make sure that the other investment, the dollars that you're going to allocate for investment, it is towards your future and where you want to take it and where you want to take yourself. I also put dollars into insurance. You're going to talk a little bit about that, the difference between term and whole, what Ebony was speaking about those $100,000 when their parents and their children graduated from college and getting them into a home and they walked in with $100,000. It's unbelievable where those funds came from, but you've got a plan for that, and those things can happen, but you got to look at your investment portfolio and manage it just as a pie. Some is going to be direct, what you're going to get from your income, passive, things that you're going to make investments in, and then making sure that some aspects is going to be risk. You need to have a risk management aspect of it in determining what in your portfolio that you're prepared to allocate on, hey, let's let this go. Let's see how we can grow this. And but you gotta allocate your investment portfolio.
So, and also, I forgot to, if you have a question, raise your hand at any point, because we're going to go through some stuff that, if it piques your interest, let's get it out of the way right away. I don't know if we have
He just-
our guy with the mic, but
Yeah.
okay. Because this is some important stuff to get going. A lot of stuff I wish I knew when I was 22 and 23. Is it on? Yeah, push it up.
Hello?
There we go.
My name is Kareem Bow. I am representing Alcorn State University. And I wanted to ask you, how do you manage your multiple streams of income while having a full-time job?
And you know, if I could just piggyback, and do you use a money manager or do you do it yourself?
I think that's an amazing question. So now I'm in a position where I have a financial advisor who assists me with that, and a CPA who handles money coming in from the real estate, and property managers and that type of thing. But I did not always. I started out just by myself with paper files, trying to figure out how much money is coming in, what I need to pay out, right? It doesn't have to be super complicated. As things grow, then yes, I would advise, or I shouldn't say I would advise. As things grow, I have found it helpful to have someone helping me, but I didn't start out that way.
And I agree with Ebony. When I started out, I have an accounting degree. So when I started out, I was doing my own accounting work, doing my own taxes, and starting out doing it yourself helps because it gives you you can look at the bigger picture and see exactly how you can start the foundation and manage your expenses moving forward. But then as you continue to grow, you definitely want to find some advisors that can actually do that work for you because of the value of your time. The value of your time is important. You could probably put it towards something else that you're passionate about. So I do have a financial advisor. I do have an accountant now, even though I'm an accountant by trade. And then I also have a property manager that manages my properties.
Yeah. So yeah, you would definitely want to have at different levels and at different stages or phases as you grow. I just as everyone here, I didn't start off with that. But as you go through different phases, you're going to require a certain level of skill set and expertise that you don't need to focus on it. It's called the difference of managing either in your business or managing on your business. And so there are people that you want to manage and do certain things within your business, managing your books, managing your taxes, those types of things. And depends upon if you're in real estate, helping in certain areas as a part of that. So your job is to continue to keep growing, not only the business, but your portfolio. Where else do you need to be looking, and those types of things?
Yeah, and a lot of it when they're talking about an accountant or CPA, there's tax ramifications to everything, right? You make money, you're going to get taxed on it. That's why putting some of it in 401ks, you hear pre-tax, that money gets stored away for your retirement without being taxed until you take it out at a certain age. I mean, and I think that's really important. Let's. Do we have another question? Or okay, right here.
Yeah, he had his hand raised first, right here.
Oh, where? Okay, over here.
My name is Ivan Adams, graduated from Grambling State University. I want to commend you guys for helping these kids out with the financial part of this whole career fair. One of my questions, one of my topics is, like you just mentioned, Steve, was taxes. How important it is to know and understand taxes, because taxes a lot of time is a pitfall for those that don't understand. You think all that money becomes to you. It actually, you have to pay your taxes. You have to understand where your tax money is even going. That's why you have to vote. The other thing is, let's expand on profit and non-profit organizations.
Anybody want to handle that? So I'm guessing. So let's explain. When you're talking about taxes, you're talking about income taxes or taxes on investments, on income taxes. So if you want just kind of the basic of income taxes, maybe how to protect your income and things like that. And then what was the other? Oh, profit versus nonprofit organizations. Can we? Well, let's remember that, and let's back into that, because we absolutely wanted to get into that type, and that's something, Jacqueline, too, you being an entrepreneur, and all you businesswomen with that as well. But just the basics of the income taxes, because that starting out are those are the things that affect us the most.
Yeah, so when it comes to income taxes, it's definitely something that you want to make sure that you have someone that's educated on that could advise you, especially if you're looking at more than just your W-2 income. So your W-2 income is when you actually work for an employer, but your 1099 income is when you own your own business. You want to make sure that you have a tax advisor that's actually understands the industry that you're in, because there's a lot of tax credits and exemptions that you can get that your average or some of your tax preparers may not be familiar with. So you want to make sure that you're working with someone who's familiar with your particular industry.
Yeah, I'm just going to agree with you. You need someone familiar with what you're working in. I will tell you guys, the first house I sold, because we purchased a couple homes and we were renting them, and then I flipped the house, and I was like, yes, this money is great. And I had an idea that I had to pay taxes. Like, that was cool, until people start throwing terms at me like capital gains. And I was like, wait, what does that mean? And I didn't set aside enough money to handle what needed to be handled. So I needed people that could explain to me what I was going to be up against, so I could position myself in a way that I could hold on to as much as possible, but also be prepared to pay what I needed to pay. In different industries, you're going to come up against different things, so it's so important to have people around you that understand the ins and outs of whatever it is you decide to get involved with.
And a lot of it's depending on where you live. There are states that have no income tax, like
Absolutely.
Florida,
That's correct.
Florida, Nevada,
Texas.
places like that have no
Yeah.
state income tax.
Yeah.
But you may think you're getting over, but you get jammed up on property
Property
taxes.
taxes. Yeah.
I mean, they're going to get their money one way or another. So, speaking of property taxes, then, let's get into real estate. Because as young people, for the longest, we think renting is our only means, because we may not have that $100,000 to put down on a down payment. So, let's start out with that process, because, again, real estate wealth is something that has negatively affected communities of color throughout this country, because we were not granted loans, or made to pay more high interest loans and things like that. But now there's opportunities, especially working at Rocket with the interest rates and things like that, where if possible, now is the time to really get into the market.
Absolutely. I will tell you, in the communities where we live, work, and play, there are often opportunities to purchase real estate inexpensively. There are programs to allow you to purchase real estate with as little as 3% down. There may be others, but as little as 3% down. And sometimes the home is not even costing $100,000. And you put 3% down on that. And the payment on something like that, depending on taxes and insurance, you're looking at a few $100s a month, where we're paying rent upwards of $1,200 and $1,500 a month. But now you have an investment that is continuing to increase in value. There are oftentimes opportunities to purchase things like foreclosures. The home that I live in now, I purchased for pennies on the dollar. Now, when I purchased it, it was livable, but it had things like ugly green carpet that needed to be changed. Or we always laughed about my kitchen. We called it the That 70s Show kitchen, because it had a green sink and that type of thing. But the home was perfectly livable. It is now worth 4 times what I purchased it for, because I was willing to go into it and say, well, we'll make these changes when we can, and just slowly make the changes. And now I literally owe pennies for what my home is worth. And I have an investment that if I need to, I can get to the cash in it. I'd have to refinance or do something like that. But we often think we cannot get into homes. We absolutely can get into homes. It is something that I would suggest that you get curious about, just like other things, that you do your research, because oftentimes we have these misconceptions about what things will cost us, and those are just that. They are misconceptions. We have misconceptions about things like interest rates. We hear that interest rates are rising. Interest rates absolutely are rising right now, but they are still some of the lowest they have been in years. When I stumbled into real estate, we were putting people in, if we put people in mortgages between 6 and 7%, like we were excited. That meant they had great credit and they were doing good. And right now, if I told somebody that I was going to put them in a mortgage at 7%, they would laugh at me and go elsewhere, right? Interest rates are much lower. So you just have to get curious and research. Most times you can get in a home a lot cheaper than you can rent. Now, there are areas where you cannot, so you have to do your research. But
Los
most
Angeles, where I live.
Absolutely. But most times you can, or at least equivalent, and now you have an asset that is growing for you.
So you said the most important word that starts with a C, ends with a T, and rhymes with Reddit. So could one of you explain the importance for young people, because this is where young people start off on the wrong foot when it comes to getting ownership, getting loans for furniture, whatever, the importance of establishing credit and how to establish and maintain good credit.
I will start, and then I know these ladies, because we talked about credit before we got up here, have a lot to say. But I'm telling you, I could be I was going to say test case. That's not the word I'm looking for. But I could be the study of the college kid that went to school and did all the wrong things, right? I left school, I had all these credit cards, because it was important to me. Like, my dorm room needed to be nice. So I charged things that I couldn't even tell you what they were, and I paid for them for years. So credit is a number, it's a score that you get that tells people who lend money about your habits when it comes to paying that money back. Simple as that. It has nothing to do with your income or anything like that. It simply talks about your habits when it comes to paying money back. So it is important to have credit. It is important to utilize it responsibly. So yes, credit cards are fine, but you need to be able to pay them. You need to be able to pay them on time, because the moment you start getting dings on your credit because you didn't make a particular payment, you missed that $10 minimum payment, now all of a sudden it's harder for you to get a house. It's harder for you to get a car. Things that you're not thinking about. We were laughing, saying, like, we had to have a credit card, right? I needed to have the T-shirt. I didn't need that T-shirt, but I was walking through the student union, and I wanted the T-shirt. I had no idea that the payment was going to come, and when I couldn't pay it, that meant the interest on my car loan was going to be higher. So the person sitting next to me, I'm getting ready to tell my age, but the person sitting next to me had a $200 car note, and mine was $350 or $400 because my credit was jacked up, right? You just don't want to do that. So I can get on that soapbox, so I'm going to stop because I lived it. I'm going to pass the mic.
And I was just the opposite. I wouldn't deal with anything with credit cards, but I knew that eventually I did have to. I'll say this. I came out of college with no debt, got a credit card just to build up my credit. So I had excellent credit, and I just started focusing on my career. And honestly, I didn't look at making investments in large assets because I didn't want debt. There is such a thing as good debt, and there is such a thing as bad debt. Okay? Purchasing a home, getting, is and a mortgage with that home is good debt. And let me tell you what my eye opener was. I was focusing on my career. I did not purchase a home. I just kept driving and making money. And then all of a sudden, and I didn't have a tax. I had someone that did my taxes, but I did not have someone that helped me look at my whole portfolio, right? So I had no debt. I had very different forms of asset, but nothing big. I got a tax bill that was $15,000 as somebody that was 30, all because I did not have what was called a large asset that was debt. And so I literally had to write Uncle Sam, and he said, well, why didn't you buy a house? I said, because I don't like debt. He said, well, that's why I got educated to what's good debt and what was bad debt. So definitely factor in the whole real estate into your portfolio. I was factoring in other forms of assets, and a vehicle is not that. I mean, of course you need one, but that will not qualify as a large, big asset that's on your, that from an Uncle Sam standpoint, that makes a difference. So.
And I need to explain that a little bit about having that big asset so you can write that off,
right.
so you don't get taxed on that.
Yeah.
Right, so with my real estate portfolio, there's a lot of things that I can write off from having that multiple stream of income. So I can write off the taxes, the insurance, the repairs that I make to those rental properties. So it kind of helps offset my State Farm income where I'm paying taxes on. So that's a, yes.
Right.
So needless to say, I went and bought a house.
Right.
Yes.
And
So,
I-
yeah, because seriously, I mean, you can write off, let's say you have a $200,000 house, but the interest on that, you're going to knock off, and let's say you make $100,000 a year, but the interest you're paying on your house, you're going to knock off $25,000 on the interest you're paying. So now you're being taxed on $75,000 of income instead of $100,000. So that's just making it a little bit easier to get through that whole tax season. Let's get into something interesting for young people, because you got a question? Okay, he's got a question here. And then we're going to get into the cryptocurrency world.
No, so my question is, so I know like growing up, I never really had money, you know what I'm saying? So whenever I get it, you know what I'm saying, I have a problem spending a little bit. So I have a question like, how do you fight them temptations, or, you know what I'm saying, or like them urges to spend?
I can take this one because I made several mistakes growing up. So one of the easiest way for me was to trick myself into saving. So you always want to make sure you pay yourself first. So now what I do is whenever I get income from wherever, a percentage of that is being automatically transferred to an online bank account that I don't have a debit card to, I don't have a checkbook to, and that has allowed me to trick myself into saving, because if I need to access that money, it's going to take some work. I'm going to have to get on the phone with someone and be on hold for a long time. So paying yourself first, but sometimes if you're like me growing up, like I wanted to have all these nice things early on, tricking yourself can help, like just sending it off to, like I have an automated account that where you have a portion of your check that's automatically being sent to a separate account.
That's the best thing. That's like money you've never seen.
Right, you can't miss what you don't have.
It just goes there, and then all of a sudden, you check.
Yeah, I think that's great. I have that too. I think that's number one. But I share with these ladies, the other thing for me, I have a lot of long-term goals.
Right.
But I also sometimes just need some gratification in what I'm doing. So I also set short-term goals, right? And sometimes they are like the silliest things in other people's minds, but it's fine for me, right? I might set a goal to say like, hey, I want that pair of shoes, and I cannot have it until I've finished X, Y, and Z. And so for me, that helps me a little bit, because growing up, I didn't have the money either. So when you get it, or when I got it, I was just like, I can get all these things. So I have to trick myself by sending some of the money away, but also giving myself small, I would say short-term or more instant like goals where I can say, yep, I'm working toward X, Y, and Z, and I got it. These ladies helped me set my next small-term goal. I'm going to Dubai, and we're going to do it here real soon. But
Let's call them indulgences.
yeah, that's exactly what they are. But they help me because while I'm getting those, I can put money elsewhere, right?
Yeah.
They kind of feed that urge for me.
It's interesting because before we get to the crypto, let's a little bit of a reality check, right? So when our parents were growing up, Social Security, the money that's taken out in your taxes to help with retirement, that pretty much set them up. Like they could live off of their Social Security into their elder years. There's no way with today's inflation and whatnot you can live off of that. So when you talk about financial goals, I look at with Social Security and what I want to do in my retirement and when I want to retire, I am going to have to eventually have, and I'm putting a number out there, $1,500,000 in retirement income, if not more, right? So, I mean, just explain to them, I'm not making bread like that where I can just all of a sudden in 5 years invest that type of money. Like, and it's going to be more for you all. So if someone could just, also the reality of the long-term investment and the real dollars that it's going to take for them just to kind of get through if they retire at 65 or 69 or something like that.
It's going to take a lot to retire at 65.
Right.
But to your point, Steve, it is a long-term play, and you got to allocate it. You will not be 20 years old forever. You will not be 19, 20, 23. And what will happen is you'll wake up one day and you are 40 years old. And you're like, what in the world just happened to all of the money that I made over these years? And so you have to look at putting, I do the exact same thing. When I'm making money, I always had some place where it went that I didn't touch. And people my family, they always knew Jackie was the one that you went to if you needed, because I was going to hold on to every penny that at least as much as I could, hold on to it. But you got to make the concerted effort to set aside dollars for the future and find. I have a great an investment advisor and brokerage firm that I work with, and they help me build the type of portfolio that I needed in order for me, once I get to that retirement age, that I will have exactly what I need to have. But it's every month, is paying attention to it. And you got to also look at that I do mine on a quarterly basis. I sit down and I assess and I work with them, and we just continue to make sure that we're trending and tracking everything in the direction that we want to go.
I just want to restate what you just said. You will not be 20 forever. And you wake up and you're 40. I promise you that's how it happens. And you're like, where did the last 20 years go? And the $100 that you take and intentionally invest at 20 will return so much more than that $100 when you invest it at 40. So it is so incredibly important to take the little bits now and invest them. I don't care how small it is. I know there are vehicles out there that allow you to buy portions of assets. Correct. So that things will grow for you. I don't care what it is, get started now, because you guys are gonna need a ton of money at retirement, right? Because that's 40 years down the road for you guys if you work into your 60s. And with inflation, to your point, that's a lot. You have people that can make the calculation for you and tell you how much it is, but it's so important that you start now. You won't be 20 forever.
Absolutely. Now, something that, especially young people, the cryptocurrency. Let's get into that, because that is an interesting investment tool. And a prime example of someone doing so, Odell Beckham Jr., the football player, when he joined the Rams in the middle of the season, he got his salary converted to cryptocurrency. Mm-hmm. What about that? Because this doesn't seem like it's something fashionable. I think to old school thinkers like me, okay, this is a trend, but it does seem like this is a longer term financial play. What about the cryptocurrency and maybe some of the risk and rewards that come with it? Yeah,
it's definitely a long-term play. I am a licensed developer utilizing blockchain technology. Cryptocurrency is, for those that don't know, it is a digital and virtual currency that you exchange on a platform, and that digital platform is built on blockchain. It is a peer-to-peer network that basically makes sure that whatever you're exchanging, whatever asset it is, that it is authenticated and is protected, and essentially it can't be hacked. You're now in a digital world, and so they have to make sure that if Steve has an NFT that he has minted, meaning he's created, and it cost $1 million that he wants to sell it for, and he's in my digital world, I want to purchase that digital asset. I've got to make sure that it is authenticated and it is real, because he's only created maybe 1 or 5 of those. I want to make sure, if you're ever into art, that's what that's like. You got to make sure that it's real and it is authentic. And his NFT, I want to purchase and make sure that it is real and it is authentic. And I do that through a digital exchange. And that digital exchange is built on top of it's called blockchain. And it is a hyperledger fabric type of technology that pulls all of that stuff together, that makes sure that that transaction is real from a peer-to-peer ledger transfer standpoint. So he places it out there, and then I pay for it either with Bitcoin or other forms of cryptocurrency, and it goes directly into his wallet. That is how that works. And everything that you're doing within, I won't say everything. I'm a developer of video games as well, mixed reality experiences, and we create a lot of digital assets. All of those things are going to happen in a completely different environment where you're buying and exchanging of goods. And you've got to make sure that those environments are secured and you can authenticate and verify the transaction. And that is what blockchain does in verifying and authenticating the exchange of money. But it's digital. It's digital, and it's paying for virtual assets.
Why is it a long-term investment play?
Oh, the reason why it's long-term, because it's just like with the stock market. It's going to have some ups and some downs. But the long-term, for instance, I've got some friends of mine that bought Bitcoin at $1,000 per share. Now it is trading at $43,000 for 1 Bitcoin. It is not going away. Cryptocurrency is not going away. A lot of people think that, oh, it's just a fad. They thought the internet was a fad.
I thought hip-hop was
They
a
thought
fad.
hip-hop was a fad, right? So every customer that we are working with, they are requiring, this is when you really know, it's 2 things. When your customer begins to require that you have a digital exchange for the buying and selling of their digital asset, as well as your exchange can support all the various forms of cryptocurrency. Bitcoin is one form of currency. There's stable coin. There's various different forms of currency that you can pay for in that digital world. That is when you know that it is not going away, and when you also see the Bloombergs, the J.P. Morgan Chase, all of these other billionaires, from Warren Buffett, who's just allocated $1 billion into crypto, I think it was a couple of weeks ago. This market is just heating up. And those that are into it, get into it now, are going to be the benefactors of it for the long term.
And Anika, what about, you talked about multiple financial streams, insurance. We don't think of making money in investments on insurance. If you could explain how you can make money in purchasing insurance.
Sure. So when we think about insurance, we normally think about protection. So like if you get in a car accident, homeowners, or you have a claim as a result of a disaster or a fire. But another form of insurance where you can create generational wealth, or just wealth in general, would be life insurance and disability insurance. So with life insurance, we often think that can only be used to pay for funeral expenses in the untimely death of one of our loved ones. But we can do so much more with that. You can get so much insurance to help create generational wealth to where you're leaving money to your heirs or to your family members. You're leaving money to pay for college, leaving money to pay off expenses such as debt that a loved one may have. So that's definitely one form. And you can start buying life insurance as early as when you're 15 days old. And as you all know, life insurance is based off of, the rates is based off of your age. So the younger you are, and the younger you are when you buy it, the cheaper it's going to be, and you can lock yourself into that lower rate at a long period, for a longer period of time. The other form of the way of creating wealth is disability insurance. So in the event that you become ill or disabled for whatever reason, or just some type of injury from your occupation, disability insurance will help to supplement your income while you're recovering. So that's another thing that we often overlook.
Is there any more questions? Right here, Donovan? Oh, right here. Okay.
Good afternoon. My name is Stefan Savage. I'm a student athlete from Alcorn State University. I have a couple questions for you ladies. My first question is, how are your investments taxed? And my other question is, when you have a low income, what would you suggest that you invest in?
So to answer your first question, how are they taxed? I think everybody's tax situation is different, which is why you need professionals to help you with that. Where you live, what you're investing in, how much you're making, all of those things contribute to tax, your tax liability and what you have to pay. So that's just going to depend on the individual. As far as what to invest in, when you said when your income is low, what to invest in, I'm not really a financial advisor, so I can't really tell you what to invest in, but I would say just do some research in regards to what is out there where you can take small amounts and invest it. If you're working, again, take advantage of what your employer may offer. To Nika's point, take a look at insurance and things of that nature.
And just also maybe to explain on things to invest in, you were talking about a pie chart, and a lot of times when you look at investments, it'll say like slow, moderate, and high risk. And at low income, you might not want to invest, let's say you put $500 in something that's like hot right now that could flame out, and next thing you know, your $500 is up in smoke. You may want to put it in slow to moderate gains, which are bonds and usually some government invested things, and those will steadily grow with very little risk that you're going to lose any money, with a little bit more risk that you'll make money. Am I correct in saying that?
You're absolutely
Okay.
correct. And also, I'm a business owner, so my taxes are completely different
Correct, yeah.
than someone who is receiving income. It's not that I'm not getting paid from the business, but it is a very, very different type of tax implication and tax structure.
Explain that, though, because if you work for an employer, a lot of times they just deduct that money from your income as opposed to,
That's correct.
that's not the case when you own your own
That's
business.
not the case, and you're literally are being paid from a 1099 perspective. If it's an LLC, and it's also about the corporate structure, right? So if it's an LLC versus an Inc. and how that's done, and underneath an LLC in my case is a single member LLC. So your tax structure and what your tax accountants, how they structure everything is very, very particular and very specific to make sure it's not that you're avoiding taxes, you are minimizing your taxes as best as you can. It's how they account for certain things, and then they start going through the process of, well, you're making this type of money now in the business, so you need to go away from, and you can appreciate this, a cash-based accounting system to an accrual-based accounting system, which is something completely different, right? But it allows you to be able to look at, and for them, how best to structure your tax plan around how your business is performing. And so mine is very different than someone who is receiving basically a W-2 as an employee versus someone who is an employer.
Donovan, you had a question? and then we'll button it up pretty soon here too.
All right, my name is Donovan Rubel. I attend Dillard University, and my question is, so you were talking about financial advisors and managing money. So how do you find the right financial advisor for you?
That's a good question.
It's a lot of work.
It is. It's a lot of work. It's about being intentional. We had this conversation before the panel as well. It requires research, intentionality, and you got to know that you can trust folks that are handling your money. For me, I'll just be honest, it was extremely important to me that because I was going to be paying for these services, that I was paying a black person, right? That was important to me. And so I started doing research to find African Americans in my community that were doing this. I was looking around at folks that I knew who had some success and were using folks to manage their money. And I went to a couple of events that people had, right? I had some consultations with a couple of folks before I landed on who I was going to use, right? That's just the process that I took. It was important to me to make sure that I was giving back to my community. So.
And there are also, I mean, when you see some of these large companies like a Voya or a Merrill Lynch, there are some regulations with some of them. Like a prime example, I had a high school buddy who had his own company and was doing this. So I said, okay, here's $10,000. I'm gonna let you manage it. Here, I want to, high risk, moderate, slow. And I just noticed pretty much before every holiday, he was calling me saying that I needed to trade something, and realized he was trying to get a commission so he could maybe buy a gift. And so I went with, I said, look, we're good friends, but not really that good anymore, because my money's not making money, because I realize you're using my investment to line your pockets, so, in that way. So, I went with an investor I knew who was very good, who was with Merrill Lynch. And so they no longer allow their officers to make commissions off of trades, right? Because so many people were doing that same thing. So what they'll do is they'll just take a percentage. Let's say you've got in your account $300,000, and then over a year their investments went up to $380,000. So they'll get like a 1% commission off of that instead of after every trade, because there were people who were milking the system like my okay friend now. Okay, it's the gentleman in the blue suit.
Good afternoon. I'm Ashbel Lamar from Florida A&M University. I have two questions. One about the financial advising stuff, because you guys were just talking about it. So, do you have to have a certain income or be in some specific type of class to have a financial advisor? Because I don't think my dad ever had one. So, is that just something for people who make a certain amount of money? And then my second question is, you guys mentioned 401ks before. I'm not too familiar with what that is. So is it similar to a Roth IRA? And if it's not, what's the difference?
So I'll take the first question. Do you have to have a certain amount of money? I would say no. But folks charge for what they do, and they're, to your point, commissions and things like that. And so often people don't employ those folks until later on, but you don't have to have a certain amount of money. And then your question about a 401k and a Roth IRA, they are very different. They're both investment vehicles, though. The 401k is typically through an employer. Some employers offer the ability to put money in a Roth IRA, but it doesn't have to be through your employer. So I don't know if that answers your question. Some will. It depends on the employer. So, for instance, I am employed through Rocket Mortgage, and so our employer has a company match, so I can put so much money into the 401k, and then it's only up until a certain point, right? It also caps out at certain amounts. So I put money into the 401k, and they match a certain amount of it. And because I've been there 17 years, I'm fully vested. So all of that matching money is mine. We get fully vested at 4 years. So year 1, 2, and 3, all of that money was not mine. Once I hit 4 years, it became mine, right? And it is invested in Mine is invested in the stock market. There are different ways as well to invest that 401k money, and there is someone who's managing the 401k who can also advise to that, like how you invest the different money.
Yeah, when you get like say you have a job and they do offer a 401k, because I think fewer and fewer employers are offering 401ks now. They'll send you a packet that if you were like me would make my eyes glaze over, so I had to take it to somebody to explain it to me. But that's available to you. But it is a great benefit if your company does that. If you have a 401k, a lot of times, like you said, they'll match up to like say 7% of what you're investing or what your income is, and it is because if it ever loses money, it's usually the money that they matched it with and not the money that's been taken out of your own personal. So you're still saving money for the long term, and let's button that up on that. For people not to panic when all of a sudden there is a dip in your investments, because it will dip. I mean, I know in the housing crisis, I lost tens of thousands of dollars, but then 4 years later, made that up plus. So explain maybe the habits of not panicking when all of a sudden you see that dip go.
So is what you were talking about. It's a long-term game, right? Those are things that you're looking at long-term. And so our CEO says this, and also our founder, that there are 2 times that you need to look at the amount of your balance. I think there are a couple more, but what they say is you need to look at it when you put money in, and then you need to look at it when you take it out. In the middle, it's going to go up and down, right? It is a very long-term game, especially if you're invested in the stock market. It's going to take dips. Like if you're watching the stock market, they're going to take dips, and it goes up. But when you look at it over a period of decades, it trends upwards. So it is not a need to get all upset. It's going to take dips, but it will come back up, and the trend over decades is consistently increasing.
And I've learned when it takes those dips is where you need to look at the portfolio and look at those companies and make the determination, do I buy more? Right? I did that with IBM. I did that with Apple. I think I did okay.
Oh, you did?
Yeah.
Oh, you got in on that Apple stock.
Yeah, I sure did.
Ooh.
Sure did.
All right.
Got in on the Motorola stock also, and then they did a split. But, I just, once again, you're paying attention to your portfolio. You're paying attention. And so you just got to make sure you look at it. And it was those investments, Steve, those are the things that allowed me to be able to leave the corporate environment and go into entrepreneurial land and to utilize those dollars. Once again, I said I was investing for the future. And that's what helped me to make that transition.
Yeah, and I'm not a financial person, but I do play one on TV. No, but I'm think about some of the things that you like or might want to like. That like this is where things can trend. Like you better believe, a year ago when COVID hit, people were buying biomedical research stocks like crazy, right? So now it's a little late to get in on a game like that. But you think about some of the things. What do we spend most of our time doing? Where do you think a lot of medical research is going to be in 10 years? Neck issues and thumb issues, right? Because we're always here. So, just think about things that you do and you see, and see if there might be something on the market in play. But, don't get too excited because, that could come crashing down. But no, thank you guys so much. This is so important, and we appreciate you guys taking the time. It's been a long day. But again, those of you who are here, you're getting advice that others are not. And that is vitally important. You will find that out through your life. You snooze, you lose. And you taking the time to be here, wouldn't you say this, young people? You're showing the initiative that all these HR heads and headhunters and employers here are like, okay, I want to hire these people. So thank you guys for being here. Really appreciate you guys taking the time. All right.
I want to thank both Doug and Shaq and as well as Marcus in really doing this.
Yes.
And bringing this to you guys. Don't take any of this for granted. These guys are really doing a great job in really trying to bring everything to you, to expose you, because that's the key thing, is getting you exposed and getting exposure so you can look at different forms of opportunities. Some of you will be on the field, some of you won't, but even when you're on the field and when that career is over, this type of information will go with you forever.
100%.
So I just appreciate Doug and Shaq and Marcus for what they're doing and setting this up. Yeah, to you all,
Absolutely.
yeah.
Big shout out to the people for taking the time to invest in you, because that's what this is. All right, thanks so much, everybody. Have a good evening. And again, there are plenty of people here looking to talk to you. So.
Good? I'm good. How are you doing, Trey? Good, good, good.